All right, hey, what's going on? This is J Leo, Jeremy LaRochester coming back. I wanted to give you guys another video. I promised the last video I did last week I was gonna do something a little different, but I was gonna try to give you um what I consider to be like a directional bias nugget that I did say I don't see anybody else doing. It may help just in terms of directional bias. And then what I'm going to show you is something that I use, I do. Um, and in fairness, I think the only other person that I've seen, excuse me, do anything remotely close to this has been MintFX, who is my mentor. One of the guys that I learned from, long and short, clarified and cleared up a lot of things for me. So big shout out to Anton and MentFX. If you need a mentorship to join, that's going to give you like a no fluff, no BS kind of an approach, um, but a outstanding community. That's the community. I will, when I upload this video, I'll pin all of that information in the link. And if you need a YouTube channel to learn from, again, no BS, no fluff, no bullshit. I'll actually pin that in the description as well. So big shout out to Anton, but not to take anything away from the mentorship, not to take anything away from MentFX. There's also a video that is on his channel. I'm gonna pin that as well to kind of give you maybe a little bit more depth and to literally push you in the direction of the education that will get you obviously where you want to go. All right, so without further ado, let me just jump in, and it's real simple. This video won't be too long. I randomly picked Kiwi Yen or NZD JPY. I'm on a daily chart. I don't have anything marked up here. So again, really quick, if you are looking at picking a market, sticking with one market, if you just want to learn that market movement, this might help you. Is one of the things that helped me. So I don't have anything um, marked up here, but if you're just looking for bias, the overall bias, right? What I did, and when I was just back testing, what ultimately got me to the level where I was profitable consistently, I just started looking at markets and I would say, okay, I'm on the daily, but where's it coming from? Where's it going to? I went straight from the daily and I went all the way out to the monthly. Just did a month, right? And with the monthly bias, what I did do was I would pinch it down. And we've already seen this, so it might be a little bit of a cheat, maybe not. But I would go to the monthly. I would pinch it down. I wouldn't look. I'd look to the side, and I wouldn't look. But if I could see the range, I'd pinch it until it looked like this, and then I would just go to my replay tool, and then I go all the way back, right? So I don't know exactly where that is, but I do that, and then basically, and I'm sitting in my sim racing cockpit. So I know y'all are like, always see this dude with an Alfa Romero shirt on. This like my team. I'm gonna ride or die. They're gonna go back to Sauber and then they're gonna become Audi. So I'm an Audi guy. So it goes a figure. So um, not selling you a quick segue, but yeah, that's what that is. That's why. All right. So back to the video. All right. So I would literally just come and say, okay, what's happening here? What's going on? Um, and then I just kind of play the price out and say, okay, well, what's happening? Just to be able to get a directional bias, right? You see prices moving away, and then I might stop and say, okay, I'm going from the monthly down to the daily, just to see what's occurring or what's happening, right? So I would say something like, okay, well, that looks like that's a high. Um, this is a structure break. So my range might be something like this, just to give you an idea, right? And again, your trading style is going to be like your trading style. It'll be whatever it is for you. Um, I would take basically like 50 of this, and I'd do something like this. I'd say, okay, that was the highs where the market started. Give myself a little bit of a buffer. And for me, I would say, okay, well, if it comes back in there, I would maybe look to take this short. But let's just play this out a little bit more just to see if it comes back up or if it continues lower. Because my range is not really going to change, right? My directional bias, I'm already looking at this as this is an overall short market is what I'm looking at, okay? And if it comes back up at a daily and taps that 50, then I'm going to look at potentially taking it to the lower here. So this is 69 right now. You nasty people out there. I said 69. All right. So that's 69.31 roughly. And we'll just pull this across because again, the higher institutional bias or the higher institutional price is kind of giving me an idea under which I could suppose certain things are going to happen. So the fact that you've got, you know, what a lot of people would say, this is a lot of consolidation. I look at it as interterm liquidity being created, and there's a tap into my area of interest. So for me, I would say, okay, and I realize this is a daily, but I want you to again, this is Anton. This is me speaking via Anton and some of the mentorship ideology that I have embraced. That is, like I said, helped me like 10,000 fold. You can apply this same thing, even though I'm doing it monthly, daily. You could apply this on any time frame because I'm not trading the time frame. I'm trading the price delivery. I'm trading the institutional bias. No sentiment. I'm not concerned about what happened back in 2000, December 2016. I don't care what the S&P, I don't care what the interest rate for the Kiwi was. I don't like none of that. You can look at that after the fact to kind of put yourself in a perspective as to whether or not you're going to take a position or not based upon what prices show. I'm only looking at what price is delivering. Again, it is the monthly to the daily, but you could apply this to the daily, the 4 hour, the 1 hour, the 15, the 5, the 1 minute, the 10, 15 seconds. It doesn't matter. Institutional delivery is going to, it will leave a footprint. It'll show you potentially what will happen and then what might be the most probabilistic move, right? So we're just going to sell here. I know there probably be a move back up and in. Don't know. But this would just be like my bias to say, okay, I'm going to be short there and let's just see what happens from here. Okay, continues to move along. I'm just trying to move this where you can see it. And within that box, does it deliver short or does it continue long? So continues to mitigate in this area. And again, you got to realize I was a lot of price action that's going to occur in a monthly time frame, right? And then eventually it breaks short. Now, there's always going to be that one or two. This would basically be my target down here, the 69. Said 69 again. I'm being a smart ass. Does it hit it? I don't know. We'll find out together. Does it come back up and take out the long term? Possibly. I don't know. But as you can see, and again, just an idea. It may come back up and take it out. Or it comes up and it liquidates, you know, or mitigates more positions. More buys to sell, sells to buys, what have you. But the same thing it was doing back here, where I told you it's just like interterm liquidity being created. It's the same thing that could be occurring here now. But again, looking at it from a monthly time frame, I'm just gonna put this and make it easier on my clicker hand. But this is one of the things, like the long and the short of it is, it's not whether or not I'm successful in the replay tool. It's more or less just giving you an idea and a supposition of what you could and or may not be looking for. What may seem smart long term if you want to be more of a positional type trader. But this ideology, like I said, positionally and long term will help. Even if you're looking at intraday and day and swing trading, like it will all apply in one form or another. Um, and even if you're looking at, again, maybe it's intraday, but you're looking at the long term perspective of what the market could deliver in a probabilistic fashion. If you are intraday, then maybe you're looking for a smaller move, or maybe you've got a funding account and you're looking at extracting a certain amount before having to maybe close all positions. This will also allow you, and it's kind of the way that I trade, so I won't give that away because it's irrelevant to everyone else. But the idea is quite simply just looking at where you could look to take positions, and there it just took us right out, right? And then pop right back up. So as you can see, um, it ultimately just delivered to the short. It may deliver shorter. I'm just gonna I'll close my little raggedy position here, but my personal trading style at this point would be once this 50 was mitigated, I would look back to what um the higher mitigation point was, which the initial tap was here. So I would be looking at this as more or less maybe an intermediary protected high, but I would have to kind of guard myself against the time frame in which this took place. This was an open mitigation 50. So yeah, so it cleared this low. So my expectancy would be just to see what price does momentarily. I would still have a short bias until the market showed me something other. And I believe, and again, I'm not 100% sure. I think that this point was actually taken out if we look at current price. So I'll just let this play out, and we'll see um, where price ends up, because this is 19 and we've got like another obviously 3 years to see if price takes this level out back here out, or if it just continues short. But this literally would be I just put that up there just to basically say that would be my invalidation point. um, if you were maybe looking to take this market lower just based on the delivery of that 69, you could actually use this most recent short within the context of a short market delivery, right? You could take that. You could look at this 50. I'm not going to replay it, but you can actually see how the delivery came back up, mitigated 50 of this larger market structure break short. And you could say, oh, you waited for it to play out or whatever. Like, I'm just using a replay tool. Yeah, it's hindsight, but I think I showed you the first move while it was hindsight. I just selected it. So, I mean, you could believe it, you could not believe it, you could think I'm full of shit. That's perfectly fine. I'm just literally just looking to maybe help that one or two or 10 people that are like, how in the hell can I get directional bias set up that'll help me? Like sometimes all you need is you just need one thing to show you. And I was one for at least a year and a half, 2 years, where the one thing that I was looking at wasn't the one thing that was helping me. It wasn't helping me for shit. So yeah, you can look and see if it delivers. That's a 50, and lo and behold, again, I'm still full of shit for those of you like, this guy doesn't know what the fuck he's talking about, which is great. But this could have been a zone that you were looking at to come back up and in, and eventually it does come back in. It taps at 50. So my rules, I'm kind of rule based when it comes to that. I like simple, but I also like probability. So if it's short, you're showing me short, I want to be short. There are some times where context will allow me, I'm not gonna lie, sometimes I will enter a counter trend trade, or corrective trade as I like to refer to them, but only when the context is going to be on my side. And if I take a loss in those cases, I ultimately understand that I'm trading within the guidelines of institutional delivery, but I'm trading against the institutional delivery of structure. So that may or may not make sense to you. If it doesn't, I'm sorry. But yeah, that's kind of all I wanted to go over with you in this video. If you're looking at a market, you're looking at trying to figure out maybe what the overall bias of that market is. I would tell you simply go to that market, whatever it is, go to the monthly chart, pinch it all the way down, or you don't even have to pinch it. Let's do something else here really quick, and I'll try to pick something else that I don't know what in the Sam heck it's doing. Um, I'm going past the ones that I know that I've traded and I actually like. Um, Aussie CAD. Yeah, this is one. So Australian dollar, Canadian dollar. So okay, we're on a monthly, right? So again, this is my criteria, and this would be my rule. So if I was looking at this market and we realize that, yeah, right now wherever it is, it within a range, it's short based on the last price action, right? So what I would do is I would come back here and I would say, okay, based on when this market opened, it opened long, right? Wherever it opened from would basically be my structure point. So I would say, okay, it opened long, it came back, it mitigated, and then it closed short. So at this point, there's nothing in my mind. I'm saying, okay, it's completely taken out the structure point from where it started. So let me see what happens. This would be my low. And then I would say, okay, well, where did that come from? Well, ultimately, for me, it literally, the range is going to be from the long back to this short. It comes back up, mitigates a little bit, doesn't clear that. It absorbs this, then it creates this ultimate short. So I would still be, and I'll draw this out so you have an idea, because now it just sounds like it's a lot of fluff and talk. I'm still here, right? That this would still be basically my market structure break based upon this short. Let me throw a horizontal line on here. It's gonna be a little back, but that's not gonna be exact. But you get, yeah, you can see it. So this would be my original. Okay, came short, broke short. Okay, broke this structural point. Great, it's short. The delivery, it clears this. So now I would just simply go, okay, well, this is my structural low, right? Based upon the break and delivery. But it immediately comes all the way up, and what does it do? It absorbs or it liquidates. So now I'm looking at this and I'm saying, okay, is that an absorption or what's happening, right? So this now would change for me. Might not change for you. It would change for me. Because I would now have to be looking at this to say, okay, is this point here an absorption of this zone? Meaning, are you just accumulating and taking those orders so you can continue to push the market short? Or is this literally just like a shift in how the price is going to be delivered institutionally? So again, in my mind, I I would personally, I'm shifting, because for me it's an open enclosure, right? Let me delete this real quick. I'll remove that, and I'm going to zoom in, and I'm just simply going to show you via horizontal. And again, everybody's trade systems, trade ideas, whatever, all different. So at this point, and I'll make that a little bit thicker, right? And make sure you can see, and I'm gonna zoom in. So perfect. Okay. So for me, this is an invalidation. So this would be an invalidation for me short. I would need to see a little bit more. And the reason that I'm saying it's invalid for me is because I have a close with this bullish candle and an open of this bearish candle. I have an open and closure above, which gives me the indication that potentially, yes, just based on the area in which it invalidates my short, it could very well be an absorption. All the absorption means is that you were just mitigating basically orders that were sitting just above a high or a low. Doesn't matter because absorption occurs in long and short markets, bullish and bearish markets. So it could have just been a push just above to liquidate those orders, to transfer them weak to strong, and to push the market back short, which ultimately is what has occurred. But the difference in what's occurred back here is that it's put it in a ranging market, right? So my idea, even though it's an absorption, would be it's no longer this. And I'll go back to the original. I would no longer be saying the market is short. So that wouldn't be my idea. My idea now would be, okay, you came down initially after market creation, market made a high, market then liquidated the structural point in which you started from. So you didn't continue back to this low. You came back all the way back up. You've mitigated or closed out or transferred those strong to weak, right? You've absorbed this zone. So now my supposition would be this is no longer my structural low. This is probably going to be my structural low here. Okay. And this, which was my structural high point, that's my structural high. So I went from potentially bearish or shorts to potentially looking at the absorption as that's now the area which price is going to be trying to reach to. So if I was trading this market, which I'm not, but if I were, I would be a little hesitant. But you know, a lot of traders, a lot of YouTubers will tell you, don't look at past because historical data doesn't really matter. And to some degree, they're correct. Historical data for me is going to give me the potential direction of where price has been, potentially where price could be headed in the future. Because you have to always remember, it doesn't matter where we get into markets. We all at some point serve as some form of liquidity to someone else, to the composite man or to the institutional market makers, those that truly move the market, because we do not. All we're looking to do is kind of we're just consider yourself a passenger on a ferry or a passenger on a cruise ship, right? If you're out in a boat and you're kind of just rocking with the ebbs and flows of the tide, and a bigger ship comes by and says, "Hey, you need a ride in." That we're looking for the ride. We're looking for the ride in. Quite simply, or to probably use a little bit better example or a better analogy. If you're a surfer, somebody that surfs, how successful are you going to be surfing against the incoming wave? Not too successful. So you're gonna you'll paddle out, you'll wait. You might see a wave that crests a little bit too early, and that's something that you say, nah, I'll pass. I'm gonna wait for the real move. I'm gonna wait for the real wave that's gonna get me all the way back into the shore, right? I don't want to be taken with the wave that crests too early into the shallows. I want to ride the wave that's going to take me all the way back into the shore. And sometimes you can't predict, but as long as you have an idea, a probabilistic approach to where the market could be showing you it's going, you serve a little bit better. So I'll try to be quick about this. It's going to be a little sloppy. It's not going to be 100% exact, but I'll try to give you an idea what my idea would be if it were me. And like I said, it's not. I'm not trading this market, um, but no replay tool, no nothing like that. Again, just to give you an idea, right? I would be somewhere. I would be looking at this market like this. And again, I realize this is a monthly. I'm gonna go down, probably no smaller, no lower than maybe the 4 hour. But this would be my 50. You could say, okay, well, let's tap the 50 on a monthly. But who the hell trades off a monthly? You're right. Nobody. So for me, I typically, if I'm doing this, I'm going to do one of these numbers. I'm going to say, okay, that would have been the 50 based upon the new high, the new structural high, even though it was an absorption, it's still a structural high. Broke that low. This is the structural range that I'm in. I'm in this low to this high. That is my structural monthly range. It has mitigated the 50 of that monthly. So my supposition, my probabilistic approach would be you might very well be targeting that absorption high. Maybe. We don't know yet. So I would pull this back to right here. Again, this is just me. Somebody else would have a different approach. And then I would zoom in a little bit more on more recent price action, which is still going to be kind of old. I would say that this is basically my structure point. This is my invalidation on a monthly. So 71.83. I will say it one more time for the naysayers, like, oh my God, bro. My God, bro. I'll say it again for the naysayers. Nobody trades off the monthly, but you're looking. I'm looking at this from maybe a positional trader standpoint. Okay, so at this point, I would also be looking at and saying, okay, closer to more recent price action. Where's my last buy to sell? Like what broke where? This was the top of the long-term 50. So from here, I would do something like this. I would say, okay, last buy to sell is here. I do the same thing that I just did on a monthly, but I would do it here. Right? I do the same thing here. And then I would move this over and I would look at it and say, okay, this is a monthly price delivery, but you'll notice something when I go down to the weekly and then to the daily. You'll notice something if you've been trading for a while. You'll see something and go, oh, and you may have an aha moment and then you may not, and that's fine. Like I said, this is gonna kind of be loose, so it's not gonna be as clean as I would like for it to be. I've learned over the years that I've developed a different kind of level of OCD about my charts and lines. Oh, come on. It didn't change color. So I'll make this an aqua. Okay, so I basically said, okay, this would be my zone that I would be looking at maybe on a weekly or a daily, but it is just the open mitigation tap here. So what I'm doing is I'm showing you the potential of if you started at a monthly and say you were looking to get an idea where price was on a daily, right? So I said this was basically my last buy before this sell back in. This was broken. This is the high that's been created from there. So if I was looking again interterm, and I'm looking at what might I be looking at more short term. Oh gosh, we're just gonna have to use that because my mouse and mouse pad not really participating very well with me. So if you're looking short term, this aqua zone, we'll go to the weekly just to kind of show you what this breakdown looks like. And as you can see, moving into the weekly, your position size is going to look a lot different depending on what your risk is, but also the idea under and the process under which you might be looking at getting involved, right? So price is still short. This was an open mitigation here of the 50. Um, you might get a deeper retracement. I kind of want to give you a little bit extra, but I don't, because it's my trading plan, and I said from the very start of this channel, I'm never trying to give somebody um, a plan under which I've kind of refined and gone into doing certain things that works for me that might not work for you. And then, as we well know, out here in this space, most people are like, that's dog shit, that's bullshit, that doesn't work for you, because my rules-based system is my rules-based system. It doesn't really fit everybody's criteria. So I kind of generalize. So like with the 50% of a market break, that's a generalization. You can go from there and refine as to what works for you. If you say, well, it's not the 50 for me, it's the 0.618, or it's the 0.236 or the 786 or whatever it is, and you want to throw a different type of Fibonacci idea behind it, go for it. Whatever works for you, right? So weekly structural bias still the same. We'll go down to the daily where it might be a little bit more reasonable. And as I just move this back out, you can make the same argument here, but what I will tell you is, if somebody looks at this and says, well, isn't this the same thing that you just did back here? This is a weekly, this is the daily. I would say, yes, it is. But the difference is, my probabilistic bias is that this market is long. It's no longer short. I don't believe, if the context is not there, in trading a short market back into a potential demand zone or potential area of interest in which price will resume bullishness or long term. Um, when the context is there, it's a correctional. It's possible. I very seldom. I would much rather just sit on my hands, wait, or just go look at another market that might be delivering in a more probabilistic manner, in which I could just follow the trend, follow what the price is already showing me, follow the wave into shore. I'm not looking at, getting drowned in the shallows, if you will. So from a daily time frame bias, um, yeah, there's really nothing for me. There would be nothing here to do until price taps back in here and it shows me something similar to this. And honestly, these are the types of moves that I look for. I know this is isolated, and you could say, well, that's in the middle of nowhere, and why? But I'm just sharing with you, and I'm just telling you. Whenever I see moves, and this is long or short, doesn't matter if the market is short or if it's long, I personally will always look for some move that shows me there's been a hard buy before a sell, or a hard sell before a buy. And then I'm looking for some type of displacement that gives me a market structure shift, right? Whenever I see that, and the reason I'm pinching this back out is because I can see that here, right, from this high, and then put this low in, and then I'm just looking for a mitigation short to maybe the 50% of that market break, and a continuation long. So on a daily, you could say, well, don't you see that here? Yeah, I see it here. But again, probability tells me that sometimes it's not as easy as just a 50 and go. Sometimes it's a 50, it's an end-of-term liquidity creation. Sometimes it'll come back and it'll mitigate deeper than a 50 before it resumes. So here, you could always go back. When you go down to the daily, you could always go back down and you can look inside, right? And sometimes inside structure, when you're coming from a monthly, will give you a better idea. What do I mean by inside structure? Okay, I will show you really quick. Let's see how long. So we're already 35 minutes into a video. I said it wasn't going to be that long, right? Okay, forgive me. Okay, I'll show you this, and then I'm going to exit stage left. Even. All right. So inside institutional might look something like this bearish candle. So a lot of people look at this and say this is a doji. Well, this doji, to me, looks a little interesting because this doji looks like it's a high and a low on the same candle. So I'm going to start back here. I'll try to mark this out a little bit more evenly or nicely than before. Okay, perfect. Beautiful, beautiful. Okay, so make sure my big head is not in the way. Okay, that is perfect. Yeah, head's out of the way, and that might be bigger. Let me see if I can make it just a little bit bigger. I can. Great, great, great. All right, and let's move that right here. Yep, yep, yep. Beautiful. Okay, so we took this doji and said, okay, this is a high and a low. The other thing I would look at this as is the last buy before this sell. The last opportunity to accumulate orders, which it did, because if you look at the candles prior to this massive doji, they're both bearish candles, right? So there's liquidity above this high, right? Candle opens, it pushes up, price closes down, it collapses, it rejects here, and it closes, right? You with me? Next candle opens, it mitigates almost the majority of this candle, but there's liquidity here, right? So if you've got your stops below this low, you're still safe. Why? Because you're looking for a continuation, right? That's still a liquidity point low. You're looking for that liquidity to be taken out. So that's exactly what happens. This candle opens, it mitigates, it pushes, it clears, right? So it clears this liquidity, continues to push, rejects off this level, closes. So for a lot of people, they're like, we already know this. That's great. I'm glad you know it. Because when the next candle opens with this doji, it liquidates both of these, which also means that there is bullish pressure that takes that liquidity out first. Then it completes and it liquidates this short, so it takes the liquidity here as well. But what did it take first? Took all the buy side liquidity first. Again, I'm not trying to convince you. I'm just showing you some of the things that I look at when I'm looking at maybe entering a position. And then as others use indicators for confluence, I've just kind of gotten into the habit of just looking at price action, and then I'm looking at the potential and the probability of institutional delivery to say, okay, is this probabilistic? Is it more probabilistic for X to happen or Y? That's it. And I promise you, maybe 30, 40% of the time I'm right, but the other opportunities that may exist, I'm honest about it, and I will tell you, I'll go into a paper trade and say, you know what, I'm not going to take that because I don't think that that's going to deliver. Let me just put it in a paper trade and let me just see. Following my rules, let me just do it in a paper trade to see. Sometimes it runs 1013 RR and I don't sit back on, oh my God, I could have gone and put my down payment on my Lambo this week if I'd have just, I don't. I just look at it and go, huh, okay. And I make a note of it. So maybe the next time in that market, or maybe the next time in a similar market, I could say, okay, maybe I've got enough data to back maybe taking that trade this time. So that's all I'm attempting to do is just to kind of give you a different idea and a different context under which you could look at certain things and how they happen. So I came back here and I said, okay, great. Took the buy before the sell side liquidity. It did clear that. And then this beautiful thing happened after that candle. I just took a 50% of that doji. And here's a 50%. So this breaks above, but it doesn't come back to this 50, right? So we're still going to be looking for at least 50%. So it's the same criteria. The criteria is not going to change, right? So we already had the open mitigation 50 tap. We're just going to look for a deeper mitigation of that same monthly 50% zone, but we're just looking for a deeper mitigation. So I'm just going to mark this out and then we'll just put it in a different color. Again, if you want to trade this short back to this, you can. It's up to you. It's not high probability. It could be if you decide to look into this market and say that, you know, under the right context, under the right pretense, it makes sense, then I would say, yeah, you could do it. For me, I wouldn't necessarily do it unless, like I said, the context showed me that it was going to make sense. I didn't mean to lock that. I wanted to pull this across so I could show you. I need to make this smaller so I can pull it. Pull. All right. Great. And again, this zone is not realistically, it's not realistically for you to be shorting back into. This zone realistically is for you to be looking to take longs to get back up here too. So again, just a thought. And that's one of the reasons why what is described as counter trend trading is a lot of people will say, well, it's not smart. That's not something you should do, and yada, 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 and all of that. Again, context and where you are in the market. If something is actually showing you the potential and the possibility of, so like if price opens here later on this afternoon when the market opens and it pops back up here and you're looking at this area and saying, oh, well, okay, well, hey, there's an intermediary break here. If price comes back up into 50 and it continues, it shows you the mitigation that it looks like it's going to continue short. Like this will actually show and hold as a very short-term protected high, and it clears maybe this low. It's possible. You know, can you take scalps and shorts here back into this area? Absolutely, under the right context or whatever your trade plan or whatever your trading ideas are. All right. So here's like I said, here's a plan. I am actually recording this. I don't really take these off the daily, but for shits and giggles, I'm in my paper trade account, so we'll just buy we'll buy this and then we'll hold it for a month. Let me add another 0 to that. So we'll make it 10 and we'll buy it here. And then stop loss will go just below. And because it's a daily, we'll target this high, right? This is actually good for a couple of reasons. So that's a 5.5. So if we were risking one, so that's already on the books for my paper trade account. But let's look at the scenario. I'm going to talk you through this, and then we're going to get out of here. All right. So here's the scenario. This was the monthly demand zone. This was the 50. The 50 was tapped. The 50 then mitigated, delivered long. Okay. It's come back in a little bit. Well, this was the deeper retracement. It's come back. It's tapped the open of this intermediary 50% demand zone from essentially weekly, daily, and now you're looking for it to come back in again before potentially delivering long. So here's the reality. The reality is price could come back in, it could tap us in, it could deliver. It could do the same thing that it's done here, right? Came back in, tapped it, made that high, the intermediary high, right? It's come back in, it's tapped here, it pushed, it broke this, and look at where it is. So the argument somebody could make is, well, what you're saying, it's going to fail. It's going to fail. And they could say it's going to fail because, look, we had this tap, it created this high, it came back, it tapped this 50, and now it's failing back down. Okay, I got you. But remember, we're dealing with a monthly, and this is one of the reasons why Some people have the concept and the belief that, you know, a market is overextended and it's, you know, it can't continue in a specific direction. Um, I would say that there's a little bit of truth to that, but it's not so much that it can't continue as much as it's just looking to accumulate additional orders. It's looking to transfer a lot of weak to strong. It's looking to create what I describe and what I constantly use as a term of it's creating interterm liquidity, meaning it's going to sweep highs and lows until it can reach a demand or supply zone, or it's going to reach an area in which mitigation is going to be optimal for that price to reverse or for it to go in that given direction. So, because we're looking at a monthly zone, it could honestly come to sweep this liquidity. It could come all the way down here before it pushes back up. But the purpose of me even coming down to a daily was to show you that rather than look for the shorts to get back into the demand, rather than look for the shorts on the daily to get back into the daily demand, look for the longs, sit on your hands, and let it show you what it wants to do. Because at the end of the day, I would feel safer waiting for this to take place than jumping in on a sell and being basically liquidated or taken out, because when the market opens or when the sentiment kicks in that influences not the institutional delivery but incentivizes the weak-minded that actually deal just in retail concept trading, they will be liquidated because the sentiment is going to say the market's short, it's taking a hit, and they're going to get in for the short and the market's going to go long because the price delivery and the institutional structure is telling you it's long. So sometimes when the context is not there, it's best to just let price show you what it wants to do. So for me, I sit on my hands, I wait for my buy limit to be tapped. If it gets tapped and I get liquidated, I'm okay with that because again, the overall context for me showing me I'm looking at the overall context says it's potentially bullish. Okay, so that's it for today. If you got any comments, any questions, any markets you want me to look at, let me know. Pin them at the bottom. I will pin that information for Anton, the mentorship. The Golden Goose strategy video I will also pin for you to go look at. And like I said, it's the only community that I've been in, so it's a little biased if I say it's the greatest community to be a part of, especially as a trader. But the amount of knowledge, if you just give yourself time to learn, don't rush, just take your time and learn in the community at large there. Um, you won't be upset. I promise you. If you apply yourself, one of the greatest communities you could be a part of. Trust me when I tell you. All right. So thanks a lot, and I'll see you guys next time. Thanks.